See your screen.
All right, perfect. All right, so this session will be recorded, so we'll make the recording available. Um, oh, 1 second. Yeah, so I'll make the recording obviously available later on this weekend. So what I'll be doing today is I'll be going over all the setups that took place on pound dollar from Monday up until Friday last week. So it was actually a pretty nice week last week, especially with the red news events. So the CPI obviously being a catalyst for price action, as well as on Friday there was also another red news event that I think it was the Bank of England interest rate decision. So it was a pretty nice week in terms of there's a lot of price action, very nice price action this week. So I am going to go over that. But just before I do so, I just wanted to just touch on the dollar because I do want to be forming the habit of giving you guys a nice dollar overview every week as well. But if you remember last week, one of the points that I highlighted on the dollar was that price was obviously trading was accumulating within this weekly order block. And it's a question of whether price would respect this order block and use this to as an area to obviously build up new buy side liquidity for the market makers, and then we would see a rally thereafter, or if price is simply going to break below this order block. Now, I do see a possibility of, at the moment, obviously price has traded towards the most recent low, left a set of relative equal lows down there. So what I do see happening over the coming days, especially for the dollar, is I do see price given some sort of a retracement, but I do believe that there is a likelihood that we could see more downside on the dollar over the coming days ahead, and vice versa. Obviously, more downside on the dollar usually means more upside on pound dollar. So we're seeing a lot more bullishness on pound dollar over the coming days. So let's take a look at this week. So obviously going into this week, we did see that price had given, so Monday, starting on Monday the 10th. Go back to then. There we go. Right. So starting on Monday the 10th, right? When we essentially started this trading week, we saw that price had given sort of these 3 sessions of contraction, and we're still bullish, like we were still focusing on the bigger picture of bullishness with an eye on basically the daily target, which is this high of the week up here, right? So that was the general idea. So if we take a look at the levels, right? So the levels were pretty straightforward, with the draw on sell side liquidity being this swing low down here, and the draw on buy side liquidity being the swing high. And then if we go down to the 4-hour time frame, so again, just going to forward play this up until just before the European Open. And again, the 4-hour levels are pretty straightforward, with the swing low being the draw on H4 sell side, and this swing high being the draw on H4 buy side. Right. And then if we go down to the 1-hour time frame, and again, just forward playing this to just before the European Open. Right, so this is obviously, I don't know what it's doing there. So it's the European Open, and this is the London Open at 3. Again, H1 buy side was again pretty straightforward. The swing high was the same as the 1-hour, and the H1 sell side was also the same as the 4-hour as well. So these were the key levels prior to the open of the European session. Okay. So now the general idea behind the setup for Monday was that, okay, price was essentially, so this was the initial accumulatory range that was identified for the day. It's also very possible that one could have taking a look at this as well as an accumulatory range, right? So right here, right? Because again, we had a trap, which is a railway trap going back into the range, coming back out. And then we had this evening star going into the range as well, okay? Now, let's imagine you took this as the range, you will have seen that before the European Open, price broke outside of the range. So there's a bearish break outside of the range, retested this bearish order block, and then continued towards the next draw on sell side liquidity, which was the swing low down here. So this is a break, retest, continuation to the downside. And therefore, obviously, going into London, or going to European Open, we can anticipate some sort of a reversal, right? But then when you usually see scenario situations like this, I sometimes, because obviously this is a complete range, this is the reason I expanded the range picture from this initial low to this initial low to also encompass all of this being within Asia. Going into London, right, we saw price had essentially traded and out of the range, but immediately we saw a move back into the range right here. All right, we saw price move back into the range. So at this point, price was still trading within this bigger range picture. Okay. So at the time, right, because obviously we were 3 sessions of drop, but the general idea was to bullish. Of course, I mentioned that the optimal position to trade the session would have been in a bullish direction. So what did we see? Well, we saw the price traded outside of the range, right? So this is a break. Price retested this bullish order block and then traded out and continued into the H1, H4 buy side targets. So at this point, we now have a valid premise to look for an opportunity because, again, price needs to not only trade outside of the Asian range, but it needs to also trade above the H1 buy side targets. But what we've had here essentially is a break, retest, and price took out the short-term high. So at this point, what is the valid setup? The valid setup is a short, right? Because that was a bit too fast, sorry. So the valid setup is a short because price had already given us a BR, taking out the recent high into the H1 buy side target, right? So this is what I mean by timing, right? So within a London Open, the timing of this, of price breaking, retesting the order block, and then trading above the H1 buy side target is what defines this to be a valid sell opportunity. So if we then went down to the 1 minute time frame, right? What we're simply looking for is price has taken out the recent high. So this is going to be a BRR 1 minute setup, right? So it's a break, retest, taking out the recent high. When I'm looking for a 1 minute confirmation short, we can see the price broke market structure right there. So this is your break of market structure. Right, classical break of market structure. And what we're anticipating is a retest of this bullish candle right there. So this is the most recent high. And what I also like to do is, let's imagine that this was on a 5 minutes. I'll look on the 1 minute for an imbalance, but considering how large this candle is, right, the entry confirmation or the entry opportunity was to be at the low of the last up close candle prior to the break of market structure, right, with the stop going 5 pips above the high. And the primary profit taking objective would have been the low of the Asian range right here. This is your profit taking objective 1. And your secondary profit taking objective should have been the H1 sell side target below. So it's a 1 to 4 R to R to the low of the Asian range and a 1 to 5 R to R to the H1 sell side target. So this is a break, retest, reversal, 1 minute variation, right? So obviously price did, after breaking structure, traded, triggered entry confirmation, and then eventually in New York, proceeded to trade towards both targets. Does anyone have any questions about this? So pretty straightforward setup, right? Pretty straightforward setup. Also bearing in mind as well that we'd seen price was bearish in New York, bearish in Asia, bullish at the beginning of the London session. And then towards the end of the London session, we obviously saw bearishness back into, and then a continuation of that bearishness within New York. Okay, so timing has played a very important factor within this setup. So this was on Monday. Let's go into Tuesday now. So going into Tuesday, we'd seen that price gave us a bearish session. Again, still within this bullish range that we're still anticipating along from, right? But obviously on that day, we got a bearish session. So still bullish. Bullish is still the dominant bias on the daily time frame. It's just a question of aligning the lower time frame setups with this, right? So if we go on to the 4-hour time frame, right, and then just forward play this to just before the European Open. Sorry, 1 second. There we go. So we have our H4 sell side targets being this imbalance right there. Okay, so I'm just going to put a line there for now just to keep things moving forward a little faster. And then we have the H1 buy side targets being the swing high up here. Okay, so it's the sell side, it's the buy side. Go into the 1-hour time frame. Just going to forward play this one more time. The European session at 2, and London session at 3. And then, of course, the 1-hour buy side target is simply going to be this imbalance right there. So I'm just going to use the imbalance box this time. And then the H1 sell side target is the swing low down euro. Okay, so these are the key levels. And then if we go to the 15 minutes time frame, all right, we can see a very nicely defined Asian range. Okay. So what can we see now? So we can see the price is obviously has been bullish. So Monday price started off bearish, and then we saw the beginning of bullishness going into Tuesday. If you guys remember, also on this day, I mentioned that price obviously was trading back into the range, but on the 1-hour time frame, we'd seen a break of market structure in Asia and a retest of the imbalance and a continuation. So there was one of two things that we could have anticipated in the session. We could have anticipated, number one, a contraction into a high volume area, or we could have simply anticipated a bullish continuation. But the general idea was to go with whatever the bias was given based on how price broke outside of the Asian range. So we saw that price, obviously, European Open began to break out, but we saw an evening star formation back into the Asian range. And then going into the London Open, we saw that price gave a very nice bullish break outside of the range. So obviously at this point, we are going to be of mind. So the first is to either wait for a retest, because again, if we have a break outside of the range, right, you want to always identify the bullish order block, right? So in this case, this is what bullish order block is. Right, so A is going to be a BRR, where price could retest the order block, take out the recent high, as well as potentially taking out the H4 buy side target, and then we look for a 1-minute reversal short. But what essentially happened was price didn't retest the order block and traded and took out the H4 and H1 buy side target. So at this point, right, the only setup that would have been valid within London would have been a BRR5. So this would be a 5 minutes short confirmation towards the bullish order block, right? So 5 minute short confirmation towards the bullish order block to the downside. That would have been the only valid opportunity because the price hadn't retested the order block. So essentially what happened was price come down and it did give what seemed to be like a break from market structure. And I know I didn't trade pound dollar this day because I was focused more on US 30, as that gave more of a setup. But let's imagine now you were intending to take this setup, right? So classic break of market structure. So at this point, the setup should have been stop loss 5 pips above the high. Your first profit target should have been the high of the order block, and your second profit target should have been the 15 minutes short-term low, which also coincided with the low of the order block, right? So this would have been your valid objectives. Okay, so we'll do a short position. As this was a classical break of market structure, right? You simply want to be selling from around this area. So short position there, stop loss goes 5 pips above the high, and first target was the low of the order block. Now you can see that the risk to reward this would have generated is a 1-to-1. And for me personally, within my trading plan, I cannot take a setup unless it has the potential to yield a 1-to-2 minimum. So this was the only criteria that didn't tick the box for me to have engaged in a short within this scenario, because the risk to reward to the most reasonable profit target at the bullish order block was less than a 1-to-2. So therefore, for me personally, there was no setup on pound dollar on Tuesday. Okay. Now, of course, price did accumulate around this area for a bit and into New York, and eventually New York, it, dropped into the order block. But for me, all of this is irrelevant because the most important thing is if price gave a setup, they didn't meet all the criteria to engage. And in this case, it simply didn't. So hence why I didn't engage in pound dollar on this particular day. Does anyone have any questions in relation to this? All right, no questions? All right, we're going to go on to Wednesday now. All right, so going into Wednesday, we've seen a bullish session on Tuesday. So at this point, it's very reasonable to think that we are going to see further bullishness over the days of the week, because obviously, as you guys already know, between Monday to Wednesday, you have potentially the low of the week or the high of the week printed. So it's very likely that the Tuesday low could be the low of the week, and therefore we could see a bullish continuation away from that low for the duration of the week. Now, the new sell side liquidity on the daily was the swing low down here, and the buy side liquidity stayed the same. 4-hour time frame, again, we're just going to forward play this. The pre-open. All right. So the next draw on the 4-hour buy side is the swing high up here. And the next draw on the 4-hour sell side is the swing low down here. Simple as that. Okay. If we go to the 1-hour time frame, okay. So on the 1-hour time frame, the next draw on buy side liquidity was obviously the swing high, which is the same as the 4-hour draw on buy side liquidity. But on the 1-hour time frame, the next draw on sell side liquidity is the swing low down here. Okay. We go to the 15 minutes time frame. Right, now the picture on this was quite interesting. So I'm just going to get rid of things that do not need to be here. Just get rid of that, get rid of that. We have the Asian range that was defined, okay, from this high to this low, back to this high. Now, prior to the open of the session, what did we see? we saw price had essentially traded down and taken out the H1 sell side target, as well as left a set of relative equal lows down here. All right, so we just call these equal lows, right? It's very important to be aware of equal lows and equal highs when they're created. So this is a purge scenario. Price had essentially gone from the high to the low, traded outside of the range. So at this point, I was anticipating a bullish reversal to the upside. But there's another way you could have seen this. You could have also seen this as a potential break scenario in the sense that this formation, because I mean, when it comes to morning stars and evening stars, the middle candle has to be a trap candle. So what I mean by that is it has to be a doji, a spinning top, but it has, or a hammer. It has to be a form of a contraction candle. This isn't a contraction candle, right? This is a full bearish candle with a lot more body than wick. So this is why I didn't consider this as a morning star formation, because the middle candle simply wasn't a trap wasn't a trap candle. Because I know someone did bring this up with me as, isn't this possibly a trap candle? But it isn't. Okay, so hence why for me, I simply saw this as a purge scenario with equal lows below. Now, whenever I do see equal lows below, it is quite reasonable to think that price will take out that equal low before we do see that bullish continuation to the upside. So London Open price took out the equal low, but this wasn't enough for me to go long. The reason being is because there are two ways price can purge, right? The first way price can purge is it can vector accelerate and close outside of the range, hang around for a bit, and then give the reversal. The other way is it can purge given free pushes to the downside. So the moment I see price create a high like this, and then break below the recent low like this, then this for me is a sign that price could be looking to give free pushes, right? Because if it wasn't going to give free pushes, right, then again, the time element would have been where we saw price vectoring. So all this structure would have happened just before the London Open. And if price had given that third candle just before the London Open, then London Open, I'll simply be looking for a long, right? But the fact that price gave the initial vectoring in the European Open, created its equal lows, contracted just before the London Open, and then gave a second leg during the London Open, then we have enough reasons to anticipate that price could give a third leg before we do see that bullish reversal to the upside. So hence why I just simply waited for price to do that. If you were in the Discord channel with me, you would have seen me waiting for quite some time for this setup to take place. Now, another thing to be aware of as well on this specific day was that there was going to be CPI. Now, there's quite a few fundamental events that takes place in the market, but it's only a handful that you always need to be aware of. So one of them is NFP. You always need to be aware of when NFP is going to be taking place, and that's always going to be on the first Friday of every month. The second red news event to always be aware of is the interest rate decision by the Fed, and also the interest rate decision by the central bank. Now, no, sorry, the interest rate decision by the Bank of England, right? Now, these two news events always takes place once a month. Now, there are emergency cases where you can have two interest rate decisions within a single month, and that's if the economy is in mayhem, right? But the majority of the time, you have one interest rate decision taking place for the Fed and for the Bank of England every month. And the next red news event you always need to be aware of is CPI. Now, CPI usually takes place on the week after NFP, right? So it's usually scheduled for the week after NFP, right? And it always takes place at some point in the middle of the week, either on a Wednesday, on a Thursday, or on a Tuesday. Okay. Now, CPI is essentially a data that explains what the interest rate, so what the inflation scenario in the United States is, whether inflation is rising, whether inflation is falling, or whether inflation is around the same as it was this time last month, right? So again, it's a very big indicator of the economy of the United States. So these three events, so CPI, interest rate decision, and NFP, they all have the tendency to catalyze a big movement within FX, especially dollar-related pairs, and pound dollar is a dollar-related pair. So there was CPI taking place in the early hours of the New York Open. So it's reasonable to always ask yourself on the day of a red news event is how is price in the morning going to be used by the news event? How is price movement in the morning going to be used to catalyze movement in the afternoon following the red news event delivery, right? So in this case, and I mentioned this in the morning, that there was a very strong likelihood that because obviously price was bullish in Asia, we could see bearishness in London. But towards the end of the London session and the early parts of the New York session would be when we could see the setup, right? So towards the end of the London session, obviously price gave this third initial leg to the downside, very close to the H4 sell side target. Now, at this point, right, because remember this, like the cutoff time for our trading is 7 a.m. New York time. So 7 a.m. is just around when the New York session begins. Okay. So at this point, I am considering obviously the possibility of price doing one of two things: to either leave this as equal lows and then come back down later in the future to take out this equal lows, and we could see a rally from there, or we could see price obviously giving three legs and then give an extended second leg. So this is obviously an accumulation in the New York Open, and then we could see a rally from there, right? So these were the two scenarios that I was considering. So what happened was essentially price obviously gave this initial leg, gave a break of market structure, right? So this was a secondary break of market structure, right? So I was like, you know what? I'm just gonna follow my trading plan. So the first entry that I took was obviously this initial long that was created after price took out the equal lows, gave us the third leg, and we are still within the London session. Sorry, Husna, can you please mute yourself?
Yeah, sorry.
Okay. So stop loss going 5 pips below the low. This is the first setup. Right? And then the long from the imbalance because this is a secondary break. And then the first profit taking objective was the high of the Asian range. And the second profit taking objective was the H4 and H1 buy side targets. So two very clear targets to have aimed for within this day. But what happened? So what happened was just before the news, so price obviously did come down and triggered at the imbalance, right? We're just going to foreplay to when that happened. And then it hung around there for a bit just before the New York Open. But what I'd also done was I set a price alert where my stop loss was, and I set a price alert, and I set a reminder at the time of the CPI news release because I wanted to be aware of when that was going to happen. And essentially what happened was just before the CPI news release, right? Oops, I don't know what's going on here. My laptop is glitching. Just a second. Let's go back. There we go. Right, so just before the CPI news release, price obviously came down, took out the low, right, and also traded into the H4 and H1 sell side targets. So at this point, I've seen what's happened. I'd already anticipated price could do this. I was ready for a re-entry, even though it was past my trading hours. So this, what I've told some of you guys that it is like there's some scenarios where you do need to give that 30 minutes leeway, right, after your trading hours if you do see something incredibly promising. And this was one of those scenarios, right? So there are times where I would extend my trading hours by 30 more minutes, right, if I see something promising as a result of some event that's about to take place. So I was like, okay, price is traded into the H4 buy side target, H4 sell side target, right? At this point, all I'm interested in is a re-entry confirmation to go long. I got that. I got a secondary break of market structure. At the imbalance, I did the same thing. Again, my stock going 5 pips below the low. At this point, I'm pretty much, time is something that I'm looking at, right? I'm like, okay, I'm gonna give this one more attempt because I'm allowed 2 trades per day, each at a 0.25% risk with a maximum of 0.5% risk take per day, maximum risk. Okay. But this time I was like, all right, there's one of two things going to happen. Either CPI is going to drive price down or CPI is going to drive price up. And if it does drive price up, it's highly likely that price was going to trade not only above the H4 buy side target, but price was also going to trade towards the daily target as well. So what I did was, rather than setting my first profit target at the H4 buy side target, I set my first profit target at the H4 buy side target as opposed to the high of the Asian range. And I deleted my second profit objective. So for the second order. The reason being was because if price was going to deliver in a way that I anticipated it was going to do so, I was ready to leave my position running overnight. So I was ready to have an intraday position, right? If the news had delivered the way that I'm anticipating. If it didn't, then I was obviously ready to close my trade at around the H4 buy side target. But TP1 was set, TP2 was deleted because I was anticipating a potential intraday opportunity. So essentially what happened was just before CPI, with prices hanging around for a bit, and then eventually CPI happened, and this was the result of it, right? I'm sure a lot of you guys saw this. Was a big shift, okay? So literally in the space of one candle, my first profit target was hit. So this was a 1 to 4, right, on the first position. Right now, at this point, because price had already taken out the H4 buy side target, right, and we'd seen a massive shift, and that massive shift was only the first leg of that 15 minutes bullish cycle. And I'm like, well, if this is only the first leg of the 15 minutes bullish cycle, then this has the potential to run for quite a while. So I essentially set my second profit target for the daily buy side target. I move my stop loss to break even on the second. So I'm just telling you guys exactly how I manage my position around this. Move my stop loss to break even. I'd already taken money out of the market, made back the loss that I'd made in my first position and a bit of profit on top, right? And I let the rest of the trade run overnight, okay? So, and the reason for that again is because of the general higher time frame bias and just generally how price tends to move when it's catalyzed by red news events. And essentially what happened was price obviously did keep on rallying into the next day. So does anyone have any questions about this, by the way, before I go into Thursday?
Yeah, just a quick one for me. With the three pushes outside of the range that happened obviously before then the final purge and then reversal with the CPI
Yeah.
news. Um I think I asked you about this before, but I just wanna clarify the with regards to anticipating those three pushes. I know we were anticipating a bearish session within London, but with regards to anticipating it, is it key to watch price action and how it breaks out of the range? Because I mean, with other purge reversals, for example, it's a case of that vector acceleration. So you have like the V3, and then you're looking for a reversal trade from there, right? So is it a case of because price action moved and it was obviously interrupted as it was moving into there, creating those three pushes? That's why you're looking for and holding for that reversal in that way. Does that make sense? What I'm saying?
Yeah. So I'm just going to explain again from why that three pushes was anticipated earlier, right?
Yeah.
So again, is the timing element as well as how price moves in certain time frames is within a certain time that you can use to anticipate. Because you should always have at the back of your mind that price would vector two ways. It would either vector using some straight candle movements, or it would vector using pushes and then accumulate and then reverse, right? So in this case, obviously, we had this vectoring that took place in the European Open. Now, if this happened in London, right, then yes, I would actually be very so. But if price had done this in London, created this equal low, and given a bullish setup, then I'll probably have taken that initial long opportunity, right? But where price in the European Open had created its equal lows and contracted, then I'm anticipating in London, because obviously I'm not going to just buy there in London, right? I want to see price take out this equal or take out some form of sell side in London, which it typically does, right? Before I'm interested in entering. But I also know that if once price does that, especially given that price didn't just like peak below the equal lows. It literally like broke below it like this, right? Traded and closed below it. Then I was like, okay, this is likely going to form a second leg, and after that, potentially a third leg. So this is why backtesting is important. This is why obviously being studying all your trades is important, because all it takes is these two things to happen, leg one, leg two in London Open, for you to be it's more than enough for you to use this to anticipate the price is likely going to give a third leg. Does that make sense? And also another timing element that I always talk about as well is if you have a bullish Asia and you're anticipating a bearish London, but then the general bias is bullish, right? Then typically speaking, you can anticipate that setup to take place towards the end of the London session to go in the opposite direction around the beginning of the New York session. And this kind of situation happened twice this week. It happened on Wednesday, and it also happened on Thursday, I believe, or Friday. But yeah, I'm going to go into that in a second. But the fact that price contracted before London Open and gave a second leg in the London Open was more than enough to use that to anticipate a third leg. Make sense?
Yeah.
Okay. Any other questions? All right, let's go into Thursday. So Wednesday, we've seen a very nice big push. And again, this is where the difference is when it comes to understanding how to be flexible with the market, right? Because, of course, following strictly your training plan or your game plan, right, you're just going to set TP1 at the H4 buy side targets and TP2 at the H4 buy side target. And that's okay because you are going to get out with a nice reward on that trade. But one thing that I really want you guys to understand, especially when it comes to day trading, and I'm going to show you guys my performance for this week as well at the end of this, is that you do not just want to focus on taking small wins. What will make a big difference in your trading, especially if you're an active day trader, is understanding how to identify situations that could give you a big win and being aggressive in those scenarios and being able to capitalize and hold your positions in those scenarios, because your biggest winners are going to come from you holding trades, right? It's going to come from you holding trades maybe for another night, for another day, or for another 2 days. Those are where your big winners are going to come from, right? So you can get big wins within the same day. You can get your 1 to 5, 1 to 6 within the same day, right? But if you want those 1 to 10 plus R to Rs, right, you need to understand and identify when it is applicable to hold some of your trade overnight. Okay. But this is something that comes with time. And one of the beauty of understanding the 3 day cycle and understanding the way price trends is you can also adjust this to your personality. If your personality is more suited to swing traded or positional holdings, then if you're able to identify when you, for example, at getting in at the contraction of the first after the first expansion, then you can anticipate price to give 2 more expansions after that. Then you can hold your, let's say you got in somewhere down there, you can hold your trade for those 2 more expansions and then liquidate at the next key area of buy side liquidity, right? So it's once you really understand the flow of price action, you can trade different positions. You can take day trading positions, you can take intraday trading positions, you can take swing trading positions, depending on where you're able to enter the market in. So going into Thursday, so we've seen 2 sessions of rise within this range, but we've also anticipating price to eventually trade to the high of the daily range. If we go to the 4-hour time frame, so our range still stays the same in terms of drawn buy side and sell side liquidity. 1 second. All right. Right. So just forward playing this. There we go. So price obviously kept on rallying. Okay, if you held your position, fantastic. You would have seen a lot more reward from there. H4, the next one on the 4-hour buy side target was this swing higher up here. On the next draw on the 4-hour sell side target on this specific trading day was the imbalance down here. Right, so I'm just going to label this as such. If we go to the 1-hour time frame, again, we're looking for these key levels. right? So next draw on buy side liquidity would be this high on the 1 hour time frame. And the next draw on sell side liquidity would be this low. No, sorry, would be this low. Okay. So let's go into the 15 minutes time frame. So at this point, I'd held yesterday's long, and it kept on running overnight. So it gave another what? So obviously this was initially a 1 to 4.6, but if you held overnight, right, that's double. That's 1 to 8.21, right? So you would have not only doubled your reward from just simply holding half of your position, right? But again, my main objective, again, remember, was the daily high. So at this point, I'm still holding positions from the previous day with my final profit target being the daily buy side target. But at the same time, I'm also open to adding on to my trade if an opportunity presents itself. I wasn't expecting one to, but I was like, if an opportunity does present itself, I'm also looking to add on to my trade into the daily buy side target. So going into Thursday, we obviously had an Asian range. I told you guys at the start of the day that it's very likely we're going to see an AMD-like model where price could accumulate, manipulate, and then distribute, or manipulate bearishly and distribute to the upside. I didn't know which was going to happen, right? The idea is if we have a bullish manipulation in London, fantastic, then we can anticipate price to manipulate into that daily BST. So lo and behold, just London open, price gave us a bullish break. So bullish breaks are great because, of course, we have a very specific AOI, which is going to be our bullish order block, right? So whenever we get a bullish break, our only area of interest is to get in at the order block. That's it, okay? So at this point, I set a price alert at the order block, waited for price to trade into it. When it did trade into the order block, all I simply did was I went down to the lower time frame, and I was simply interested in taking a setup long, right? So obviously price traded away from it, gave a bullish break of market structure right here. EMS. What kind of a break of market structure was this? Well, it was a classical break. Now, classical break interest is obviously going to be a down close candle. There's an imbalance right there. So again, when I see confluence of down close and imbalance, I like to take my entry where those confluence comes together, right? So confluence came together at the imbalance. So that's where my long entry was right there. Stop loss goes 5 pips below the low right there. Right. That was the setup. And then my profit target, I remember I was like, shall I aim for the H1 buy? So I was like, nah. Either price takes out the daily high today or it doesn't, right? And I was ready for the consequences of that because I mean, I'd already locked in profit from yesterday, so I knew that whatever I was trading today was just pure profit. So again, this is another thing, right? My trading decision will not always be the same as yours because the decisions are made sometimes based on number one, your profitability for the week, and number two, essentially what you have to lose. So what are you actually risking? So my risk was greatly reduced today because I'd locked in profit. So rather than me aiming for the high of the range, I was like, look, price has a very high likelihood of taking that daily buy side just based on the general trajectory of price action, right? And therefore, my TP1, my TP2 was at the daily buy side target for a 1 to 3.5 on top of my other position as an addition to my other position from the previous day. So a very simple setup. The price obviously triggered the entry at the imbalance and then proceeded to rally away from that point onwards. And it was a pretty fast trade going into the New York Open, right? So at this point, whenever price gets close to a very high time frame target, by the way, it has a tendency to just go close, pull away, and then eventually take it out. So don't panic, right? If you're aiming for a higher time frame objective, price gets close to it and pulls away, don't just close your position thinking, oh no, it's going to reverse. No, just be patient. Let price do what price wants to do because it will eventually take out that target. Okay. Any questions about Thursday trading day? Again, there's a very straightforward break, retest, continuation setup with a classical break of market structure and continuation to the daily BST. Any questions? No questions. We move on to Friday. So going into Friday, all right, I'm like, one of two things could happen. We've seen there's nice 3 sessions of rise within this range into this bigger range. Price hasn't really closed above it yet, but either price is going to give us a bullish break above that range and goes back into the range, or because it's Friday, Fridays usually you see reversals. We could see a reversal on that day. So either a bullish continuation will take place on a Friday or some sort of a bearish reversal, right? So going into Friday was like, all right, what's going to happen, right? Was it still because Thursday I was pretty much 89% sure we're going to see a continuation. Wednesday, 89% sure we're going to see a continuation. But Fridays was just one of those days where it could give us a continuation or it could give us a reversal. And therefore, the more important thing to focus and pay attention to was the lower time frame confirmations. Okay. So what were the ranges? So H4 buy side targets, pretty much where this line is. I didn't delete it because it will be a while to like go back and find it again. All right, but I already showed you guys on Friday morning, so it was a recent high that was relatively close to the daily buy side target. And then the H1, the H4 sell side target was obviously going to be this swing low down here. Our daily buy side target had obviously changed to the higher high because price had already taken out this initial high, right? So again, a very clear range on the 4-hour time frame, right? So we had the low of the range, we had the high of the range up here. So we go down to the 1-hour time frame. Right, so we have the H1 buy side target and we have the H1 sell side target down here. Okay, simple as that. Something in the way. Is it this? And delete that. Okay. And delete this one as well, and delete this one as well. All right, so let's take a look at the 15 minutes Asian range. So the 15 minutes range was pretty defined, it's pretty straightforward. In the sense that obviously we saw a very tight range that formed, with this being the high and the low of the range, and price obviously accumulated around this range before breaking out of the range in the European Open. So in the European Open, we saw a very clear break away from the range, right? No, actually, no, I do apologize. This wasn't a break. The break happened in London, right? So because this was a railway track, this was a railway track. So all of this was a trap around this range. So none of this was a break. It was only when price gave this 1, 2 bearish closes outside of the range that we had a break, because obviously this is not a trap pattern, right? So obviously after this happened, right, the question is, where is the order block responsible for this break? And the answer to that question is right here. Okay, because this is the block that existed before price broke out of the range. So London Open, right? What price did is, so there's one or two setups you could have taken. You could have taken a retest of this bearish order block, right? So if you go to the 1 minute time frame, right? So this is where price retested the order block and then gave a break of market structure right there. Now, I personally missed this promising setup because I was actually paying attention to a potential reversal to the upside, but it was the most reasonable setup on Friday, right? So it's a bearish break of market structure with a breaker, okay? So obviously one would need to enter at the midpoint of the breaker. with your stop loss going 5 pips above the high. Wait, what's something I was looking for? There you go. All right, so just doing 5 pips. There we go. So short position from the midpoint of the breaker, stop loss 5 pips above the high. And there were 2 profit target objectives, okay? The first profit target objective was the H1 sell side target. But now below the H1 sell side target was the 800 EMA. And usually when it comes to reversals, it's actually it's good to trade reversals towards the 800 EMA, especially if price has been rallying for a few days. You always want to aim for the 800 EMA on the 15 minutes time frame, or you want to aim for the 800 EMA on the 1 hour time frame, because usually price would reverse towards the 800 EMA. Okay, this is a standard thing, right? So the H1 sell side target was here. The 800 EMA was somewhere down here, which would have obviously goes in at 1 to 2. And usually the 800 EMA is close to the H1 sell side target. I would simply aim for the 800 EMA, right? And then,
Sorry.
yeah.
I thought you wouldn't be able to take that because it hasn't taken out buy side or sell side yet.
Exactly. Not yet. Just a second, right? So the 800 EMA was just below the H1 sell side target, right? But now the second criteria for this setup would have been obviously for price to have taken out either the H1 VST or the H1 SST, right? So for me personally, within my trading plan, I needed to have waited for that to happen. Hence why I didn't really focus on the retest of this order block, because my attention was on one of these 2 AOIs to be taken out first. And after this, the AOIs are taken out, then I look for a setup. And I remember at the time I was like, okay, so it's one of 2 things could happen. Either price could take out the high of the order block as well as the H1 buy side target, which would have been optimal because that would have been in line with a reversal setup. And then we could have seen that reversal to the downside, right? Or B, the second scenario was for price to take out the H1 sell side target, at which point, if price does that without retesting the bearish order block, then I'd be looking for a reversal setup on the 5 minutes time frame. But if price retests the order block and takes out the H1 sell side target, then I'd be looking for a reversal setup on the 1 minute time frame, because that will be a 1 minute BRR setup scenario. So essentially what happened was price came down, took out the H1 sell side target, right? And obviously we did have that retest of the bearish order block. That's why on this day, on Friday, we had a retest. I was like, okay, long is the most reasonable setup in line with current price action. Okay. So what I did was on the 1 minute time frame, I'm sure some of you guys also saw a similar setup. 1 second. So obviously price came down, delivered this high and delivered this higher high, right? And then this was the imbalance because this is a secondary break of market structure. So I took my entry at the imbalance, stopped going 5 pips below the low. Right? And then took a long from the imbalance like that. And I was aiming for 2 targets at this point, right? So price had already hit the 800 EMA as well on the 15 minutes time frame. So I was like, hey, this could be a bounce off the 800 and price could potentially move to retest or to trade into our bullish order block. So I aimed for the high of the bullish order block for a 122.68 and the final target as the H1 buy side target for a potential 123. So the price came down, triggered the entry, the area of interest, right? And then it did rally around for a bit, even traded back into the Asian sell-side target. But then obviously today price wanted to correct itself based on the bullishness that happened over the 15 days. Okay. So I'll just show you what happened in a second. That's a very long setup, and then eventually price came down and took out the stops. Right. Now at this point, should you re-enter? Should you not re-enter? Now personally, a re-entry would have been a no, because for me, the optimal direction to have taken the trade today was short, which would have been something that would have made sense in line with the 3-day cycle and in line with what usually happens on Fridays, right? And another reason for me as well is that Fridays are usually the days where I personally do not like taking a lot of trades. So if I take a trade on a Friday and a Monday and it doesn't work out, I'm very hesitant to re-enter. Tuesday, Wednesday, Thursdays are the best trading days to take a trade on. So essentially, that's why if you get stuff out on a Friday, I would not advise re-entering unless you, for example, you personally see something a lot clearer than maybe I did at the time, and you saw a very great re-entry confirmation, and it was in line with your trading plan, and you had the capital to risk for that specific trade. Then, fantastic, go ahead and do so. But Fridays are just one of those days where it's just a lot better to take it easy. And if you see a nice, easy setup, take it. If it works out, fantastic. If it doesn't work out, then just call it a day and wait for the next trading week. All right. So that was Friday. Right. 1 second. So Friday, we saw a massive correction against the move that happened obviously earlier in the week on Tuesday, Wednesday, and Thursday. So does anyone have any questions about Friday setup? I know some of you guys took something very similar. I think Shane, you did as well. And I think Frank, you did as well. But does anyone have any questions about that? Any questions? No? We're good?
No, good. All good for me.
No worries. Okay. So finally, let's take a look. So this is essentially my performance for this week, just based on the trades that I engaged in this week. So you guys should be able to see my screen. So basically had, just to wrap up the week, I had 3 up days, 2 down days, with my biggest win
It's
day.
not up, bro. Sorry, bro.
Hmm?
It's not up. It's not up. We can't see it. Well, I can't see it.
Let's give it a few seconds. Is this the same for everyone?
Yeah, I can't see anything.
Wait, I think I'm just sharing trading view. I'm just sharing my whole screen instead. There we go. You should be able to see it now.
Yeah, all good.
All good? Perfect. So this was a pretty standard week. Obviously, the goal for me this week was to ensure keep my losses low, but keep my wins high. But then obviously on the day where I took that big trade, I only took some profit. So closed that day at around 0.4%. But then on the next day, because I'd taken most of my profit off the table and obviously adding on my position, I was able to take 3.2% off the table on that day. So it was a very nice week. Obviously, again, it's just ensuring that, because the beautiful thing about day trading, right, is that you just never know when the big winners are going to happen, right? And the big winners usually typically happens like once or twice a week. But then between your big winners, right, all you're doing is managing your positions, ensuring that if you have a losing trade or a losing day, you keep it at a minimum. And if you do have a good trade, right, your aim, even if it's a 1 to 2 or a 1 to 3 or a 1 to 4, you're trading at a 0.25% risk. Your aim is to maximize your profit by obviously ensuring that you're entering in the right place, by minimizing the amount of entries you need to take on that position, right? And you're ensuring that you end the day as profitable as possible, right? But what you're always aiming for is ensuring that you're obviously keeping as much profit in your account for that next big winning day. Like I'll show you guys, for example, the last 3 weeks, right? So just show you from what's this 15th of April. So if I show you guys from the 27th, right? 27th, I don't know why that's happening. Okay, I don't think this is as updated as it should be. There we go. So this is the past couple of weeks, right? Now you can see that there's a few days that will stand out to you, right? And that's on this day, where it was a massive 1.8%, massive 2%, then had a bit of a drawdown on this day, a bit of a drawdown on this day, a bit of a drawdown. But generally speaking, you can see that the wins massively outweigh the losses. And even though they're in between these big winners, there are also winning days, but this winning day is relatively like this is like 0.6%, right? The big winning days completely overshadows the smaller winning days and also the smaller losing days, right? And this is your typical this is what your average, not average, but this is what your returns should look like as a day trader, right? Especially if you're consistent, right? You should be ensuring that you are having the discipline, right, to know when to stop trading within a losing day, right, to ensure that your drawdowns are not giving back a lot of what you made on these winning days. And the thing is, when you do get these big win days, right, because you know that you had to wait for maybe 2 to 3 days or even a week, right, for the market to present a killer opportunity for you to go aggressive on, right? When you do capitalize on those days, you will be a lot more hesitant to take massive risk on the days that comes after that, because on the days that comes after that, you want to preserve as much of that profit as possible in order to ensure that when the next big win day comes, right, you're maximizing your profits and pushing your account forward on those days, right? So people sometimes have this misconception that with day trading, right, you need to every day be massively profitable, or every single day taking money out of the market. That's not the case, right? As a day trader, right, because there's a difference between swing trade and positional trading. With positional traders and swing traders, right, these guys are taking maybe one trade a week, or even in some cases one trade a month, right? And they're holding that position weeks on end. But this is a lot easier. But day trading is a lot more harder, and it's actually a lot more harder for the vast majority of retail traders that want to embark on day trading to be profitable. And it's not because the opportunities do not present itself, but as a day trader, you are constantly fighting a battle, not just with the market, but also with yourself, right? Because discipline is important. The margin for error in day trading is incredibly low. As a swing trader, you can afford to take some errors because you're not always engaging in the market. You're not always engaging it with yourself, right? You're maybe engaging in the market. You're taking out one trade every 2 to 3 weeks when it presents itself. And if you get that wrong, that's fine. You wait another 2 to 3 weeks for the next opportunity to present itself, right? So with swing trading, the margin for error is a lot lower, right? But you need to be a lot more patient, right, with swing trading. Whereas with day trading, the margin for error is nearly zero. You cannot afford to get things wrong, because if you have just one day where you completely mess up, right, and you self-sabotage, you essentially overtrade on that day and you just take trades that you shouldn't take, what that will do is it will erase 2 to 3 weeks of consistent growth, right? And that can be very psychologically damaging, right? Imagine you've had 2 to 3 weeks, you've grown your account by 6, 7%, right? And then all of a sudden, all it takes is one day for you to give 3 to 4% back to the market, and you've erased 50% of the growth and the gains that you've made just because of one day self-sabotaging and not being able to control yourself. So that's why day trading is harder, and that's why it's harder for a lot of traders to succeed with day trading, because you have to constantly be fighting a battle with yourself. And this is one of the reasons why establishing certain disciplines and utilizing certain tools are very important. So, for example, one of the tools that I use with risk management is an EA that the moment I reach a pre-specified drawdown limit of, so I have a maximum drawdown limit of 1%, it will automatically close my MT4 and prevent any further trades from being executed, right? And if I do execute any further trades, it will automatically close that position. And if I try to reopen my MT4, it will automatically close my MetaTrader 4 again. So it prevents me from trading until the next day. So this is something that I put in place to ensure that, on the days, especially after having successive winning days, on the days when things are not working in my favor, I do not self-sabotage and I do not overtrade, right? And another thing you should always use is the PSE calculator, which I gave to every one of you, to ensure that you are calculating your positions properly, right? So whatever you want to risk for that day, whether it's 0.25%, whether it's 0.5%, right, you are entering the correct risk and you are trading the appropriate sizes, right, for that specific trading day. So next week, Saturday, I am going to have a training where I am going to cover a lot of practical tips when it comes to ensuring that you can keep profits from a big win day. So I'm going to help you guys define what actually is a good trading day for you and what exactly is a bad trading day, right? And if you can identify when a trading day is bad, the idea is to limit your drawdowns on those days. And I'm going to be able to share with you guys as well the EA that I'm using to close and automatically give me that hard close on positions whenever a maximum drawdown has been reached for that day. So next week's Saturday's training is definitely very important. I highly recommend you guys plug into it. I will be putting out a lot more information on it so over the coming days ahead, right? But yeah, so every week I will be showing you guys not only the setups for the week, but I will also be showing you guys how I performed on that week as well and how I traded. And I do want to be completely transparent with you guys because at the end of the day, you're all trying to get to a certain level in your careers, and you need to know that you're learning from someone that's already been there and done that, right? So if you do have any questions around your weekly results as well, if you feel that, for example, you're not happy with how you performed in a week and you're not sure what you can do or what you can implement to improve, your trading in the coming weeks ahead, again, feel free to reach out to me. I'm more than happy to look at your performance. I'm more than happy to review your account, see what you've done and what you could do to, get better, right? Because at the end of the day, we're all here to grow as traders. So that's it from me today. I'm not sure if anyone has any further questions. Any further questions? If not, this will be the end of our session today.